So NBFC as a category has done rather well this year, and NBFC as a category does rather well when markets are of the view that interest rates will come down and the consumer book will keep on expanding because of affordable interest rates. LK Gupta, Managing Director and Chief Executive Officer of Essar Oil, joins us now. Mr. Gupta, good morning. Thank you for joining us. Let's first talk about your ECB plans. You plan to raise about $2 billion. Now, $2 billion is about 11,000 crore. What will you do with 11,000 crores?
Because as of now, the Reserve Bank of India, as you are aware, they have brought this policy that the companies who have export earning, they are allowed to borrow ECB to the extent of their 75% of best export in last 3 years. And we are eligible to under that $2.27 billion. And the whole purpose of this is to refinance the rupee loans, because as you are aware that Essar Oil, basically all the revenue streams are in dollars, and this is a mismatch in our balance sheet that we have rupee borrowing. So we are trying to replace the rupee borrowings with the ECBs.
Most of the Indian corporates which have opted for dollar borrowing in last 4 or 5 years, they are suffering because rupee has plunged against the dollar. So what gives you the conviction that a rupee loan or a dollar loan is better than a rupee loan?
Yeah, Nico. As I mentioned to you just now, as far as Essar Oil is concerned, our total sales are in dollars, our total purchases are in dollars, our margins are also therefore are in dollars. So as far as Essar Oil is concerned, our total revenue streams are in dollars, and in balance sheet when we have rupee borrowings, in fact that is a risk in our balance sheet, because if rupee appreciates, then our earnings will reduce in terms of rupee, and we will lose. So we are completely neutral to any appreciation and depreciation in rupee if we convert everything into dollars, because then we are 100% dollar driven company.
Mr. Gupta, morning then. We understand that you've been reducing crude sourcing from Iran. Which are the alternative markets that you've been now sourcing crude from?
As you are aware, we have completed our expansion and optimization projects in March and June respectively this year. And with this, our complexity has gone up from 6.1 to 11.8. What that means is that we are now able to process a very low API. That means our average API of crudes processed, which was about 32, 33, has now come to 26, 27. So predominantly we are now going for more of heavy and ultra heavy crudes, and our basket therefore is shifting more towards the Latin American countries rather than Middle East.
You've been increasing Nelson complexity of refinery as well. How will that help you to refine dirty crude?
Basically, the increase in complexity means that a refinery is able to process more of heavy and ultra heavy crude, and in spite of processing heavy and ultra heavy crudes, which are comparatively cheaper as compared to the light and sweet crude, we are able to maintain the throughput slate, which is more towards the light and middle distillates, which give you better revenue. So just to tell you that in second quarter of this year, we processed more than 80% of heavy and ultra heavy crudes, and out of which 64% were crude which were very ultra heavy, and despite that our product slate of light and middle distillates, which is mainly petrol, diesel, ATF, kerosene and LPG, naphtha, has gone up from 72% to 82%. So this therefore improves the profitability of the refinery, because you are able to process the more of ultra heavy crudes which are cheaper and still produce the higher end of products which are Euro 3, Euro 4 and light and middle distillates.
So Mr. Gupta, I mean your GRMs then, they've been improving. Tell us, how do you see them panning out in the coming quarters? Would you maintain or would you see a higher profitability going forward?
Yeah, as I just mentioned to you that once we have increased our complexity, we are able to process more of ultra heavy crudes which are cheaper, and we are still able to produce higher end of the products. And therefore the second quarter, where we had GRM of 7.86, is just the beginning of what is going to come. And in fact, in the month of September, when our all things were completely stabilized, we had a GRM of 10 plus. So going forward, my take is that our complexity should get truly reflected in our results, and we can look to the future with a very good workings from Essar Oil.
So in terms of a crude benchmark, what are you benchmark against?
As far as crude is concerned?
What's your crude benchmark? I mean,
So
are you benchmark against NYMEX? Are you benchmark against Brent? Are you benchmark against some other category of crude?
Yeah, basically as far as our products are concerned, they are benchmarked against AG normally. So that means our normal benchmark for crude oil is Dubai, and therefore when we buy our crudes, we try to convert all those into Dubai.
Since Essar Oil has gone through a massive expansion in last 2 to 2.5 years, share some more details with us if you can, that how much of your existing expansion is still due, and for 2013 what will be your total refining capacity, operational refining capacity, not proposed refining capacity?
Yeah. We have completed our expansion in March and optimization in June. Now with that, our capacity today is 20 million tons a year. Our second quarter throughput has been